Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Thank you for having me today.
Well, the OPEC-plus group, including Russia, have agreed to cut oil output by 10 million barrels a day for the next 2 months. Still, oil prices fell further. What's happening there?
Yes, as you said, U.S. crude dipped below $24 yesterday, giving back most of the gains, plus declining by far. Earlier trading day, it surged 12% as the OPEC and plus countries agreement was expected to happen. But it seems that the people are concerned about the level of drop in the global fuel demand. It seems that it's going down by 30% plus at this point in time. So even though 10 million barrels per day reduction of production is a good news, but nevertheless, the decline of the fuel demand is putting the pressure on the oil price movement. However, though, we think that this kind of 30% drop in the global fuel demand is not going to be something that will stay forever. We do think that that number should shrink, and therefore the production decline by 10 million barrels per day should be quite positive news overall. We think that the oil price is probably in a band where it's not going to go down further too much. Some people were saying it might go down to the low teens, but I don't think that it's going to break $20 anymore in the future. And probably in the future, it might have a little bit of a leg up to somewhere between $30 to $40 range. The reason, though, it's not going to go above $40 is because the structural change is happening. And the movement between where the gasoline cars to the electric car is actually rapidly happening. And therefore, we think that the overall demand side is probably much less than previous cycle. So if that's the case, then yes, the production cut is good news, but we think that the upside potential for oil price should be fairly limited.
Got it. Well, stocks on Wall Street overnight held steady in the midst of all that. In fact, we're up more than 1%. Korean stocks today up as well. What's happening in the global stock markets?
Right. The news of the unemployment benefit came in at quite a high number, over 6 million again. So total of about 17 million people applying for these unemployment benefits. Clearly, that is a huge number. That's over 11% unemployment ratios. That was definitely a negative news for the market at the beginning. However, though, Wall Street ended higher on Thursday because extending gains due to the Federal Reserve, the Fed, coming out with another broad 2.3 trillion won stimulus support, which will support the local government as well as small, medium-sized businesses. With this, we are seeing a liquidity injection being very large. We are seeing M2 growth rate reaching over 14%, which is a record high level since 1980s that we see the numbers. Clearly, huge liquidity is benefiting the overall equity market. And with the news of the European deciding that the boosting measures close to 19% of GDP overall is also pushing the market go up higher. And because of that, Korean market actually closed by more than plus 1% today.
And we're also seeing gold spike up again, but this is a little different than what happened last month when the coronavirus was becoming a pandemic, because last month the gold price fell in tandem with stocks. So why the rebound right now?
Right. The reason for that is because of a huge liquidity injection that's happening global scale. More money supply that coming through that creates a value of dollars or value of the various currencies to go down, because basically they're printing money. And because of that, the gold, which is considered as one of the substitute to the currency, the demand and is actually rising. And that's why we have seen the gold price reaching one of the highest levels that we haven't seen. It's up more than 3.3% yesterday. It has hit the $40 range, which is one of the record high level of gold price. We think that as long as continuation of liquidity injection happens from the central banks, gold price is not going to go down in the future. So we think that there will be continuation of interest by the investors in the future.
Well, that'll be interesting to watch. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for coming on and have a great weekend.
Have a great weekend. Thank you very much.